Welcome back at 8:44. As we near the end of the first quarter of the year, we're taking a look at this year's earnings so far. Here to break down the details is financial advisor Christian Clausen. Christian, good morning. Thanks for being with us.
Well, thank you.
Crazy to believe we're already essentially through Q1 of 2023. And you were telling me the outlook for this first quarter of the year was abysmal. Did it live up to or live down to those abysmal expectations?
Well, the bar was certainly set low. Most analysts was expecting earnings to be down somewhere between like 8 to 10%, the earnings growth from previous quarter. And that's the second consecutive quarter too, where they continued to just reduce the earnings growth. However, so far, we were only 1 week into it, 80% of the company has reporting better than expected. But again, it's because the expectations were so low that it's really hard not to.
So what is the outlook for Q2?
Yeah, so the Q2, we're expecting something similar. It's really hard to predict, what earnings going to do. Inflation is still somewhat high, even though it's kind of coming down. And then, of course, we have to think about, is Fed going to raise interest rates? And most likely they are another 25 basis points. And so with that said, we expect Q2 to be very similar to what Q1 was.
And you're saying, kind of on a lighter note, Q3 and Q4 have their better outlooks for Q3 and Q4, but of course it all depends on how we perform in this part of the year.
Right, and we're hoping that Fed at that point is going to start reducing interest rates because inflation have actually gone down, and that's going to help a lot of companies, from a earnings perspective.
For people who are still looking to invest, what specific sectors or areas should they maybe focus their investment goals in?
So I think aerospace is going to continue to do well, and when we think of aerospace, it's Boeing, Lockheed Martin, and for obvious reasons, we think of the war in Ukraine is unfortunately not going anywhere, and so we expect that sector to continue to do well. Energy, anything oil related, natural gas, we also expect to continue to stay high. We heard news from OPEC about a month ago that they were like, well, we're gonna not pump as much, like we're not gonna release as much supply. And so with that said, we think oil prices are going to continue to stay high, and that's good for the energy sector.
And as far as finance is concerned and transportation, you were telling me transportation not in the sense of transporting humans or human people, but products, goods and services, goods.
Yeah, that's up significantly for this year, and there's still been adjustments since the COVID years. And the way that we see it is because inflation, because of demand, a lot of people are still, buying a lot of things online, that transportation is going to continue to stay high and have, good earnings.
And finance is another area you mentioned, even despite the uncertainty with some of the bankings or the banks in the industry, finance is still an industry that you'd encourage people to invest in? Yeah,
absolutely. We have to be selective, and especially with, the bank runs and the uncertainty in the bank sectors. But there are some highlights there, and it could be a great opportunity.
All right. Well, Christian Clausen, we appreciate your time this morning.
All right. Thank you.